So what we've done is we've listened to our investors. We have a lot of them who say to us that we still want good returns. We don't want to compromise those returns, but we do care about where we invest. We want to avoid those industries that are not consistent with our own values, and we want to invest more in those companies that are enabling the transition to a more sustainable economy, and also the companies that are leading the way to the transition within the economy to more innovation, more focus on digital, more knowledge-based, education-orientated economy. So that's what we've done here. We've looked to put together a fund that takes the ideas that our investment team can generate and direct those towards those companies that are really leading the transition in the Australian economy. So the first thing I'd highlight is that it's a high conviction, concentrated portfolio. So that means it won't invest in more than 35 stocks. And this is something we're drawn upon the skills that we've developed over 15 years with our focus fund. And in our view, I think it reflects the mindset of our investors. They have conviction in these companies that we're investing in, and we need to reflect that in the portfolio. It also is important because that helps drive the returns. The second feature of the portfolio is that it doesn't invest in those industries that are not consistent with the values of our investors. So fossil fuels, gaming, alcohol. So we're avoiding investing in those sorts of companies. So the third feature is to invest in the companies that are actually enabling the transition to a more sustainable economy, and also those companies that are leading in terms of the transition towards a sort of more innovative economy. So these are companies like software companies like Xero, healthcare companies like CSL, which we believe are really sort of got significant opportunities to grow in the long term. The final feature of the fund is that we want to directly engage with the companies that we're investing in, leverage the relationships that we have with them, and help them manage their ESG risks better going forward. I think there's a combination of things that have come together. The first one is the pandemic. That's really drawn attention to how, there are existential risks and they can have a huge bearing on financial markets. And when you think about at a company level, you've had some companies which have really been harmed by what's happened, but also others that have benefited from the shift in the way we are all living our lives. So it just demonstrates, we are in a complex, interrelated world, and that we need to be prepared for other risks, for other things that could suddenly change, and environment or social change. These are all potential things that could have a major impact on investments, and we need to be prepared as investors. So I think that's the first lesson that I would really highlight from what we've seen this year. The second thing that's happened is that at Pendal, we've really brought together a whole variety of skill sets. We've got a large Australian equity team, very experienced, really good relationships, but we've also able to draw upon the Regnan team, which really provides a lot of insights and research on ESG matters. We have a responsible investing team, and we've got a whole collection of other investment teams that are providing insights on all of these matters. And so we've done a much better job now bringing these skill sets together and giving us clarity on the opportunities that are out there in this area. For us, the really important thing was to listen to what our investors were saying and make sure we gave them what they were looking for. And so that to us comes in this broader package. So first of all, you have to avoid investing in those industries that your investors are saying are not consistent with our values. So that's what we've done. But more than that, we also have to engage with the companies that we are investing in. We don't want to just be passive. We want to be very active. We want to help them become better companies to manage their ESG risks. So that, I think, is a very important part of the fund. But on top of that, we also want to make sure we're investing in those companies that really are enabling that transition to a sustainable economy, that are leading in terms of innovation, are helping sort of build those new jobs. And that's where there's lots of opportunities, and we can draw upon the skills and the sort of resources that we have to get those ideas into the fund. And then the final thing is, you still need to manage the risks, and you still need to make sure that you're delivering to your investors a product that's giving consistent returns over time. And again, that's something we can draw upon from that experience we've had over many years.